Well, good evening and welcome back to Rainbow Investing, where we examine a spectrum of ideas to build long-term wealth. Today we are talking the great Warren E. Buffett, Chairman and CEO of Berkshire Hathaway, and what he can teach us about the stock market here in 2021. Now, Warren Buffett has always been known as a source of investing wisdom over the years. He's a role model for most investors, including myself, and he's regarded as the GOAT of investing, the greatest of all time. And it's one of his greatest quotes that we'll be discussing today, because I think it has a unique perspective as to what's been happening in the stock market here in 2021. Now make sure you stay to the end of the video, because I will show you how this quote relates to the market as it stands today. And I will also show you guys a video of Warren Buffett himself discussing what he means here. So make sure you don't miss that. So, Warren Buffett's quote goes like this: "The line separating investment and speculation, which is never bright and clear, becomes blurred still further when most market participants have recently enjoyed triumphs. Nothing sedates rationality like large doses of effortless money. After a heady experience of that kind, normally sensible people drift into behaviour akin to that of Cinderella at the ball. They know that overstaying the festivities, that is, continuing to speculate in companies that have gigantic valuations relative to the cash they are likely to generate in the future, will eventually bring on pumpkins and mice. But they nevertheless hate to miss a single minute of what is one hell of a party. Therefore, the giddy participants all plan to leave just seconds before midnight. There's a problem though. They are dancing in a room in which the clocks have no hands." Now, I've skipped over a bit here, but here's the last and most important part, I think. "But a pin lies in wait for every bubble, and when the two eventually meet, a new wave of investors learns some very old lessons. First, many in Wall Street, a community in which quality control is not prized, will sell investors anything they will buy. Second, speculation is most dangerous when it looks easiest. At Berkshire, we make no attempt to pick the few winners that will emerge from an ocean of unproven enterprises. We're not smart enough to do that, and we know it." Okay, so one line in this amazing quote stood out especially brightly for me. It was, "Nothing sedates rationality like large doses of money." Does that sound like something that seems especially relevant here in 2021? I certainly think so. The world has never seen the kinds of money printing that is currently going on. More than a fifth of all the US dollars that have ever existed were created last year. Last year in 2020. 1 year, 1/5 of all the US dollars that have ever existed in history. And I've even seen figures that estimate it is even higher than that. And effortless money there has been, in truckloads. Here is the price of Tesla just over the past year. NEO, we see here. GameStop here. Now, I know each of these companies has their own set of circumstances here, their own story and reasons why these moves have occurred. But it's hard not to give at least these graphs a description of effortless money. Triple-digit, quadruple-digit returns like these are not normal in the stock market, and they are not how Buffett became one of the richest men in the world. One might say it's even been a hell of a party. So if you like this video so far, guys, please do me a massive favor and just hit that like button just under the video there. It means so much to me, it only takes a second. And if you haven't already subscribed and joined the channel, I would love to have you on board as well. I love making interesting videos like these, so if you'd like to see more, there's that big red button to hit as well. Thank you. But let's get back to Buffett. So, you might think that this quote comes from the 2021 annual letter to the shareholders of Berkshire Hathaway that was just released recently. But you'd be wrong. This quote is in fact more than 20 years old. Buffett wrote it in his letter to shareholders for the year 2000. Yes, that one. 2000. The turn of the century. So that's 2000. What a relief, you might say. That's ancient history. What does that have to do with 2021? Well, I've got some charts here for you, which I think might knock your socks off, as Buffett himself might say. Here is a graph of the S&P 500 spanning from the 1st of January 1990 to the 20th of March 1999. It was a phenomenal decade to have it been invested in stocks, as you can see. Now, here is a graph of the same S&P 500 index from the 1st of March 2009 until today. Does that look familiar? Yes, over that time, the S&P 500 had gained a very similar amount, if not more, to the decade we just talked about in the 1990s. It's not too different. Now, wait until you see these next graphs. Here is that same S&P 500 graph, starting at the 1st of January 1990, just like the old one. But instead of ending on March 1999, it ends on the 15th of September 2002. It's not so rosy. And here is when Warren Buffett penned this letter from which I just drew the quote earlier. Investors have a nasty habit of forgetting the past. When stocks have been going up for nearly a decade, it can be hard to remember that it never lasts forever. And when that we are finally reminded, it can be so brutal. The S&P 500 was in a bear market from the 20th of March 1999 to the 15th of September 2002. That is a long time to watch the market and your own stock portfolio fall. Almost 3.5 years, folks. Now, just look at the stock price of Microsoft here. Like most tech stocks, Microsoft had an incredible run in the 1990s. But then it didn't. From December 1999 until September 2016, Microsoft went nowhere. That's a long 16, 17 years to wait to get your money back. Not that there was anything wrong with Microsoft. It still dominated the world with its Windows and Office software this whole time. Everyone remembers Windows Vista, right? But it's the stock price that simply got too high. And investors who are partying with clocks with no hands, who knew the party was going on too long but didn't or couldn't tell the time, didn't notice. They saw their Microsoft shares turn to pumpkins and mice. And a new wave of investors learned some very old lessons. Like I said, effortless money and one hell of a party. And that brings us back to the final part of Buffett's quote, a warning for investors today, I believe. But a pin lies in wait for every bubble, and when the two eventually meet, a new wave of investors learns some very old lessons. First, many in Wall Street, a community which quality control is not prized, will sell investors anything they will buy. Second, speculation is most dangerous when it looks easiest. Those investors in 1999 learnt those lessons the hard way. Now, while GameStop and Tesla and Bitcoin and Neo all look like easy money, it might just be speculation at the end of the day. And Buffett tells us that speculation is most dangerous when it looks easiest. And a pin lies in wait for every bubble, as he said. So when is our market going to turn to pumpkins and mice, as Warren Buffett might say? Well, who the hell knows? But don't make the same mistake that those investors in 1999 did. Back then, everyone was saying that Buffett was an old man who didn't understand the internet, who didn't get the new world. This time it's different, they said. Well, they were wrong. The internet did come, and it did revolutionize the world as well as the stock market. Most investors weren't really around to benefit though. They were too busy watching their Microsoft shares get cut in half. The cart jumped in front of the horse and investors paid the price. Now in 2021, people are saying the same things about Buffett. He missed Amazon, he's too old, he's 90 years old, he doesn't understand the cloud or software as a service, he's living in the past. Well, Buffett's still around, and Berkshire did better than ever between 1999 and 2002. And right now, Buffett has more cash sitting on the sidelines than he's ever had before. He's sitting out, away from the party, looking at his watch, and watching us all dance in a room with no clocks. He'll be ready for when the clock strikes midnight, but most of us won't be if history is any guide. Are we going to listen this time? Thank you so much for watching, guys. I really appreciate it. Don't go anywhere, though, because here is a video of the great Mr. Buffett himself talking a little more about what we've discussed in this video. So stay tuned and good night.
I have two small questions. Firstly, with the speculation, and some would say rampant speculation in the high-tech and internet arenas, could you share your views on the potential fallout from this speculation for the general economy? And secondly, how long did it actually take you to perfect that curveball? And are we going to see it tonight?
I don't think I want to give anything away about my pitches tonight. Ernie Banks may be in the audience. I know he's in town, and I just can't afford to do that. But you'll see it tonight, and you can describe it any way you'd like. The question about the high-tech stocks and possible fallout. Anytime there have been real bursts of speculation in the market, that it does get corrected eventually. Ben Graham was right when he said that in the short run it's a voting machine, in the long run it's a weighing machine. Sooner or later, the amount of cash that a business can disgorge in the future governs the value it has, that the stock commands in the market. But it can take a long time. And it's a very interesting proposition. For example, if you take a company that in the end never makes any money, but the trade changes hands representing a valuation of 10 or 20 billion dollars for some time, there's no wealth created. There's a tremendous amount of wealth transferred. And I think you will see, when we look back on this era, you will see this as a period of enormous amounts of wealth transfer. But in the end, the only wealth creation comes about through what the business creates. There's no magic to it. If a company that's not worth anything sells for 20 billion, and 5% of it changes hands, somebody takes $1 billion from somebody else. But investors as a whole gain nothing. They all feel richer. It's a very interesting phenomenon, but they can't be richer except as a group unless the company makes them richer. And it's the same principle as a chain letter. I mean, if you're very early on a chain letter, you can make money. There's no money created by chain letters. In fact, there's the frictional cost of envelopes and postage and that sort of thing. So the net, there's some money destroyed a little bit. And there's money destroyed by the frictional costs of trading and investing. That comes out of investors' pockets. But the manias that periodically take place, and not just in stocks. We had a similar mania. Well, I'm not necessarily similar. We certainly had a mania in farmland here in Nebraska 20 years ago, and land which couldn't produce, we'll say, more than $70 or $80 an acre would sell for $2,000 an acre at times when interest rates were 10%. Well, that math will kill you. And it killed the people who bought it at those prices, and it killed a great many banks here in Nebraska who lent based on that sort of thing. But while it was going on, everybody thought it was wonderful because every farm was selling for more than the similar farm it sold for a month earlier. And it was momentum investing in farmland. And in the end, valuation does count, but it can go on a long time. And when you get a huge number of participants playing with ever increasing sums, it creates its own apparent truth can be for a very considerable period of time. It doesn't go on forever. And whether it has fallout to the whole economy, like it probably did in the late 20s, or whether it's just an isolated industry or sector where the bubble bursts and it really doesn't affect other values, who knows? But 5 or 10 years from now, you will know. Charlie?
Well, I think the reason we use the phrase wretched excess is that there are wretched consequences. If you mix the mathematics of the chain letter or the Ponzi scheme with some legitimate development, like the development of the internet, you are mixing something which is wretched and irrational and has bad consequences with something that has very good consequences. But if you mix raisins with turds, they're still turds.
That's why they have me write the annual report.